Hello traders and welcome to another video review. Today is Wednesday, July 5th, 2023. Let's take a look what's going on the Forex economic calendar for today. As you can see, we got some data published overnight in form of the AJG Manufacturing Index from the Australia. Services PMI data from Japan were published as well, and this time they were lower than expected. 54 points was the actual reading, while the forecast was 54.2 and the previous reading was 55.9, so slight deterioration here. Retail sales from Australia are in line with the expectations of 0.7%, a little bit better than the previous reading of 0%. Now, during the London session, we got the German BUBA President Nagel will give a speech, and then we have, of course, the European Central Bank non-monetary policy meeting. Both of them are at 9 o'clock. 30 minutes later, we got a speech from the Vice President Buch from Germany, and then 25 minutes later, we got the German Services PMI scheduled for a release. S&P Global Composite PMI for the Eurozone and the Services PMI for the Eurozone are scheduled for release at 10 o'clock. Then 30 minutes later, Composite PMI and Services PMI data are scheduled for release from the UK, of course. During the New York session, we got the factory orders scheduled for release at 4 o'clock, and then the key event of the day, FOMC meeting minutes. This data will be published at 8 o'clock as usual. 2 hours later, we got the FOMC member Williams to give a speech, and at the end of the day, we got the API weekly crude oil stock data. So, pretty intense day. Most of the market participants will be waiting for the FOMC meeting minutes, but in the meantime, there's plenty of the PMIs scheduled for release, mainly from the Germany and Eurozone and of course the UK. So let's take a look what is the situation of this currencies that are related to the European Union and the Germany. I'm talking about euro. First one, euro dollar. So not much is going on the euro dollar, to be honest. We got caught in the very slight, very narrow range zone. Of course, the technical support is here, 1.0836. The intraday technical resistance is here as well, 1.0935. We are trading below 50 already, and then below the 100 periods moving average. This will act as the immediate technical resistance, 1.0886. So this level must be violated in order the market to go towards the 50 periods moving average and then towards the intraday technical resistance. Still, the main level for bulls is located at 1.1012, and this is of course the swing high and technical resistance at the same time. We got this ABC movement to the downside. However, this movement here, this wave here, doesn't actually look that much impressive. Doesn't actually looks like the wave, the impulsive wave that should combine some kind of a free subwave pattern. So far, maybe the wave 1 is made, maybe wave 2 is in progress right now. Any big movement to the upside on the euro is of course welcome, and it will be appreciated by the market participants, of course. But if we break below this level, 1.0836, then our scenario of the ABC correction and then eventually 1, 2, 3, 4, 5 impulsive wave to the upside is invalidated. So that's the situation of the euro dollar. Let's take a look at the US dollar to Japanese yen because of the published data overnight. So what do we have here? The first thing we can see straight on is that there is a breakout below 50 period moving average on a 4-hour chart. Then there was a test of this moving average. Let me just give you a little bit better point of view, and I will zoom in. So there you go, breakout, test, new local low. That's a kind of important, because it means that this market, after the breakout below the 50 periods moving average, is under the pressure. Nevertheless, this is new low made on a pin bar ish candle. So A, B and C to the downside. If you can't see this kind of waves, let me just put this labeling for you. A, B and C, this is like a classic corrective wave to the downside on the short term, and then of course we got this attempt to move higher. Where is the next target? The next target for the bulls is located at 145.8, which is the swing high. So if this correction here is done, then there are chances for the US dollar to the Japanese yen to rally higher. Otherwise, this correction might be under the bigger pressure from the bears, and they can push the market way lower. The larger time frame trend is still intact. Now, British pound. What's going on the British pound? So we got this PMI data waiting for the release. Okay, that's fine. We will wait for them, of course, and see what they will change in the general outlook of the British pound. The movement from the lows of 1.25, I guess, yes, 25.90, is kind of three waves here. Okay, so it's not that much impulsive. However, the momentum, as you can see, is still positive. It's right now returning towards the level of 50, so the neutral level. However, this high at 1.2738 is still considered to be important intraday high. Is ready. This high is ready for a test, is ready for a breakout as well. All it needs is a little bit of courage and momentum from the bulls, of course. What is going on here in terms of the line? If we take into the consideration this trend line, of course, then we are far away from the trend line, so we need to break above this trend line in order to continue the rally towards the swing high at 1.2847. This movement to the downside looks corrective. However, the eventual rally here is not really that much, let's say, developed yet. So we are still waiting for another push here in this market. Intraday technical support might be around 1.2665, 2657. So that's the key level here on the 4-hour chart for the British pound. If there is a breakout below, we will test this low. If there is a bounce, there is a chance to test the upper trend line on the British pound to USD. And because there are data from the crude stock change, then let's take a look at the crude oil technical picture. So again, we are being closed inside of this range. This range is located between $75 and $67 basically. Okay, so as long as we trade inside of this range roughly, we cannot say that any kind of a trend just started. So we got this range here, and the market is going up and down inside of this range. No rally is being expected while the market is trending inside the range. So we need a breakout. Basically, we need a breakout out of the range. But it looks like the technical support was tested once, almost for the second time, third time, and still the level of 67 holds the position. So nice return to back to the range and above the 50 and 100 periods moving average, but nothing changes here. Nothing changes really drastically on the crude oil chart. So let's just wait for some kind of a trigger that might cause more volatility, and what is even more important, let's wait for a better levels to be either, let's say, tested or even violated. We are talking about the extremes, 75 and 67. So outlook remains horizontal, basically horizontal trend. Range trading on the crude oil is being accepted until we have a breakout in either direction. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.